By jingo, we're off to the races as the new week starts and a big rally. The Nasdaq is up more than 2.5%, and the broad-based market, the S&P is up. The 30 Dow stocks, the industrials, they're up more than 1%, given back just a bit, but a good rally. The main events of the day. High silver prices are surging, and retail traders have a new asset to argue about. Vaccine makers are promising more doses will be delivered to EU nations, and Republican senators want a slimmed-down stimulus package. They're going to meet the president, Joe Biden, any moment from now. We are live in a very snowy, cold, in fact, it's blizzardy weather. It's Monday, the 1st of February, but we are here with you. I'm Richard Quest, and of course, even in the snow, I'm in business. Good evening. Tonight, retail traders are setting off a silver rush amid new worries about market volatility. Silver was trading on Monday at its highest level in 8 years. Buyers have been talking it up on social media. Remember, the price you're seeing there is what it's doing right at the moment. It doesn't reflect the way the whole day has gone from one close to the next. And members of the Reddit group Wall Street Bets are split over the move into precious metals. Some say buying silver would strike a blow against hedge funds and banks. Others say it weakens their position on GameStop, and others shortened stocks. Now, look at GameStop and you see what I'm talking about. It's down sharply. This could be because the buying activity has abated on that stock, or at least there's just a moment of reality, down at now 236. AMC shares are climbing, which does suggest that the activity, well, not does suggest it confirms the activity is still there. The unusual trading patterns are causing anxiety in Washington.
There is an important set of policy issues that have been raised as a result of market volatility in recent days, and we think congressional attention to these issues is appropriate.
Paul LaMonica is with us. First, Paul, tell me, what's this play with silver all about? I mean, who's on the other side of this silver trade?
Yeah, it's a bit mysterious, Richard, because you do have people, when you look at that Reddit Wall Street Bets community that's now required reading for anyone in our business, there is this divide as to whether or not people think that they should be trying to squeeze silver higher, as if silver was something that was being shorted to the levels that GameStop and AMC were. And there's even, some, Wall Street, some Reddit silver threads that are out there also. But what I find a little bit odd, Richard, is that if you look at the big silver ETF, SLV, one of the top 5 holders in that is Citadel, the same Citadel that has its relationship with Robinhood about order flow and would be benefiting from any rise in silver prices going up. So I'm not so sure that the Reddit community wants to be handing Ken Griffin and Citadel another big fat check by essentially pushing silver prices higher. It's a bit strange that this is all of a sudden the asset that is become a day trader play tool.
And also, I mean, what are they trading in? Because they're trading, obviously, the ETF one level. But the thing with silver is that it's all related to the amount that comes out the ground. It's all related to, I mean, there are two distinct traders in precious metal commodities. There are those who do it for speculative purposes, and there are those who do it for physical delivery.
Yeah, and I think most people that are buying silver, they are not buying the metal itself. They're buying ETFs. They're doing it as a hedge against inflation, a weaker dollar, similar to what's happening with gold and also Bitcoin, which has now become kind of like the digital precious metal. So I think when you look at what's happening with silver, there are a couple of silver mining stocks that have also been surging higher as the price of the metal has exploded today. They are benefiting, of course, also. But it's hard to imagine that the same investor that is deciding GameStop and AMC are something to buy because they think the consumer is going to come back and that you believe the economy is going to rebound. It's not the same play as silver.
What's the point here? I mean, these these they're not day, well, they are day traders, but I mean these retail investors, they seem to be following the pack where the established institutional investors go, but eventually those institutional investors will adapt their strategy.
Yeah, I think that is a valid point, and that you could have the big hedge funds fight back. But for the time being, it could be a case of, some people I've spoken to said that, hey, a lot of people are stuck at home right now and they don't have much better to do. They may be unemployed or underemployed, or maybe they are fully employed and just have a lot of more money at their disposal because they're not going out and spending as much. They have cash to burn, so they're trying to find these things to prop up. And in some respects, it's kind of like Occupy Wall Street a few years ago, but it's gone digital.
Paul and Monica, thank you. Now, the financial advisors often say there is a difference between, between investing in the market and placing bets. US Senator Elizabeth Warren says regulators need to step in and do so now.
What's happening with GameStop is just a reminder of what's been going on Wall Street now for years and years and years. It's a rigged game. They've turned this stock market not into a place where you get capital formation to support businesses, but more into a casino. It's time for the SEC to get off their duffs and do their jobs.
Faites vos jeux, mesdames et messieurs. Place your bets. The investments promoted on Reddit do have the feeling often of a roulette table. Now, first of all, spin the dice and it lands on GameStop, a big target of the short sellers. Round it goes, and this time they're buying up shares of the movie theatre chain AMC. From there, it's gone in strange directions, including Dogecoin, a tiny cryptocurrency that began as a joke. Now it's silver, the commodity and the related securities. Where next? Red, black, numbers, lines or streets? Rana is with us. Rana, who I'm sure will cast a supervisory glance over the. Look, Rana, what do you make of it? Are we merely seeing something that's happened in different guises in the past? Same game, different rules.
I'm going to say yes and no. I would agree with Elizabeth Warren, who I feel maybe reading from my first book, actually, which was on this topic, about the market itself having become a casino over the last 40 years or so. I mean, I think that we've lost a certain amount of price discovery, particularly in the last decade with the Fed money dump, the central bankers that have been papering over various problems in the real economy. But really, since the 1980s onward, I would argue that markets have become much more driven by financial things, stock buybacks, leverage, than they have about underlying issues and opportunities and challenges within an individual company. That said, I do think that what happened with GameStop and in particular Robinhood as a platform, and we know this platform has had problems. They've already run into trouble with the SEC before this. They're operating like a typical high-tech Silicon Valley startup, move fast and break things. So some of that is specific to this company.
All right, Rana.
Yeah.
What's wrong with it? What's wrong with it? I've read a lot. I've seen, I've heard the millennials on my team saying, good, it's always been corrupt, we're getting on with it. And then there's old fogies like me who say, well, we've seen this before. I remember 1987, et cetera, program trading. So what is fundamentally wrong with, if there is anything at all, with what the retail investors are doing? Take, for example, today with silver.
Honestly, Richard, you can argue it both ways. And I've had conversations with regulators who will say, in some ways, these platforms are just the latest iteration of what began with index funds and then continued with a retail broker like a Charles Schwab. And now we have apps. And so, hey, this is about the little guy getting in the game. You can argue that as long as the little guy is playing by the same rules, not breaking existing rules. But you're getting at a deeper question. And I have sympathy for those millennials. I think we have an asset bubble in markets. I think that we have an economy that's way too dependent on asset prices. that's one of the reasons why I'm a big fan of some of the changes that Biden is trying to make with the work, not wealth, starting to move to more of an income-based economy rather than one that's based so much on asset bubbles. It's going to burst. It's going to end badly. And Richard, I will be back here on the show talking about it when it does.